Welcome dear students. I hope you are all fine and you are working some of the problems relating to the financial statements which we have discussed in the previous classes. Today I have come out with a new problem which is having the trial balance information and also some additional informations you have. With this information, by using this information, we need to prepare both profit and loss as well as balance sheet. So the statement of profit and loss and balance sheet should be prepared in this problem with the given information. So we should be very careful in analyzing each and every item, and we should have to take where this item to be considered, whether we have to take the item to the balance sheet or to the profit and loss account. So that we have to understood. Why? Because in the previous problems where I had come with the problem to prepare either the profit and loss statement or the balance sheet separately, but here this is a problem where you need to prepare both with the single information. So we should be very careful. Let us discuss the problem once before going for the particular format. Prepare statement of profit and loss for the year ended 31st March 2024 and balance sheet. See, here we need to prepare both statement of profit and loss and also the balance sheet of measures Srujanya company. So for which company we need to prepare? We need to prepare for the Srujanya company as on the date from the following trial balance. So with the following trial balance we need to prepare the statement of profit and loss as well as the balance sheet. Let us see what are the information they have given. Purchases, we have 1,40,000 purchases. See, here they have given debit as well as the credit side of trial balance. Credit side. So this way of preparing the statement is called as trial balance. Okay, they have given the trial balance here where we have debit information and the credit information. So as per the golden rules of accounting, all the debit balances are what do we consider all the debit balances? Debit balances can be either assets or the expenses. Okay, and the credit balance always the incomes or the liabilities. That we should have to keep in our mind. Purchases, whether this purchase is an expenses, this is a debit balance, this is an expense or the asset, we should have to check. Purchases always is an expenses and which should be taken to the profit and loss statement, and this purchases will be considered for the preparation of cost of goods sold. Correct. So this is the item of profit and loss statement. Next, goods returned. See, goods returned, it is there in the credit balance. Then which goods return it is? Purchase return or the sales return? So when the purchases is a debit balance and the return of that is a credit balance, means it is a purchase return. Always sales. See, look at here, somewhere sales they have given. Here there is a sales, and sales it is a credit balance. Always sales. Sales means your sales revenue you are earning, that means it is an income. Income always should be a credit balance. If the return belongs to this, should always be the debit balance. That you should have to understand. So this goods return is a credit balance, that means it is a purchase return, and this purchase return will be taken to the profit and loss statement only for the calculation of cost of goods sold. Next, carriage inwards. Carriage inwards, it is also a direct expenses that will be used for the calculation of cost of goods sold also. So this is taken to the profit and loss statement. Then salaries and wages. This salaries and wages, while looking at this item, you should be very careful. Instead of salaries and wages, if they would have given wages and salaries, always wages is a direct expenses whereas salary is an indirect expenses. That means wages will be taken to the calculation of cost of goods sold and salaries will be considered as an operating expenses. Okay, so when combined together, if it is given, where we have to take, how we have to segregate this? So we cannot segregate that. Instead, what we do, salaries and wages, if it is given, we will take this as an operating expenses. In other than this salaries and wages, in case if they have given wages and salaries, that means wages, the first information will be wages. So we consider that the wages amount will be more compared to the salary, so directly we will take that as an direct expenses for the calculation of cost of goods sold. So this is a operating expenses and will be taken to the profit and loss statement. Then rent, rate and taxes, this is also operating expenses, will be taken to the profit and loss statement. What is the amount? 5,600. Next is insurance premium. Insurance premium, it is 1,000. This insurance premium is also an item of profit and loss statement because it is an indirect expenses. Next, discount. So whether this discount means it is a discount received or discount allowed is a question. So this is a debit balance. If it is a debit balance, what I told, debit balance means always it is an expenses and debit balance, always debit balance will be either expenses or assets. Debit balance will always be expenses or assets, and credit balance, if credit balance information they have given means always this credit balance means it should be incomes or profit or liabilities. Okay, so this you have to understand. So discount, if it is a debit balance means either it should be expenses or assets. It is not an asset, so it is an expenses. Which expenses, whether it is an operating expenses or non-operating expenses. So there is a dilemma for considering this discount allowed. That means discount, it is not a discount received, debit balance, it is a discount allowed, we can say. So this discount allowed, where do we take, whether we should have to take this as a operating expenses or non-operating expenses. What do you mean by operating expenses? Always the expenses incurred for the day-to-day operational activities of the business called as operating expenses. So this discount allowed to the customer, when this discount is allowed to the customer for the purpose of selling the goods. So there will be an intention for the seller or the company to sell the goods, so they are allowing discount to the customer. So this can be taken to the operating expenses, but this is actually not the operating activity of the business, correct? Giving a discount is not always an operating activity of the business. So this will be also considered as a non-operating expenses. Usually this discount allowed will be taken as operating expenses, but in some of the textbooks, in some of the authors, they are considered non-operating expenses only. So let us take this as a non-operating expenses only, and it will be taken to the profit and loss statement. Next, bank. Bank, debit balance. Tell me whether it is expenses or asset. Bank balance, cash at bank. So whatever it may be, so this bank is nothing but it is a asset, cash in hand, bank, cash at bank. So this is an asset for the business. This is not an expenses. Okay. So bank is always an asset. So this will be taken to the balance sheet and it is under asset side. Okay. Next, plant and machinery. So this plant and machinery is also an asset, correct? It is a tangible fixed asset, and this will also be taken to the balance sheet and asset side. If the information given relating to this, like information on or depreciation, if it is given, we have to calculate depreciation on the plant and machinery. If there is no information, no need to consider depreciation. Directly we take the amount of plant and machinery of 24,000. Okay. Next, investments. Investments, it is always an asset. But investments here, they have not mentioned whether it is a short-term investment or the long-term investment. If nothing is mentioned, we will take that as a long-term investment, and it will be taken under the heading asset. Next, furnitures and fittings. Of course, this is an asset. This will be taken to the balance sheet. Next is bills receivables. So where do we have to take this bills receivables? Bills receivable is nothing but the amount which should be received from the customer in the form of a bill. They have given through an endorsement. So this bills receivable or the debtors will be issued to the debtors on credit basis will be given to the customers. Okay, so this bills receivable is also an asset, will be shown under current asset. So asset means it is balance sheet. Okay, next, cash in hand. Cash in hand, bank is also an asset. So this is a current asset shown under balance sheet. Next, sundry expenses. The name itself says it is expenses. Sundry expenses can be a miscellaneous expenses, we can say. So expenses always will be taken to the profit and loss statement. Next, opening stock. Where do we take this opening stock? Can you remember this? So we consider this opening stock for the calculation of cost of goods sold. For the calculation of cost of goods sold, this is the first item we take, correct? So this will be taken to the profit and loss statement. Sales. Of course, sales always, it is an income. It will be taken to the profit and loss statement. Next, bills payable. See this bills payable, how bills receivable is a asset. Like same way, this will be taken to the balance sheet as a liability under the heading current liabilities. Okay. Next is share capital. Of course, share capital is a liability, the capital of, invested into the business. So this will be taken to the balance sheet under liability side. Okay, so all the items of the trial balance we have taken. They have given trial balance. So the trial balance information we have analyzed when we have understood that where to be taken, whether to the profit and loss or to the balance sheet. That means all the items should be adjusted once. Okay, so either in the profit and loss or in the balance sheet. But look at here, there is an adjustment or the additional informations they have given. This additional information, whenever you see the information relating to the financial statements after the trial balance. After the trial balance, that means these are being not considered yet. When it is not being considered yet, these information should be shown for twice. Either in the profit and loss or in the balance sheet. Okay, so 2 times we have to adjust. Sometimes what happens, the information can be adjusted, both the adjustment can be made in the profit and loss statement only, or both the adjustment can be in the balance sheet, or one in the profit and loss statement and other in the balance sheet. But twice the adjustment must be made for twice. So let us see what are those information. Provide outstanding salary rupees 5,000. See, there is a heading called salary here. Yes. So this is the salary. Okay. Look at here. This is the salary. There is an adjustment for this. I am marking here. Why? Because to make you understand, there is a adjustment for this. So outstanding salary, there is a salary and wages of 28,000, but 5,000 rupees of salary is outstanding. Outstanding is nothing but not yet paid. It is due. Okay. So this 5,000 rupees we have to adjust twice. So where we have to adjust this 5,000 rupees? One is outstanding expenses as an expenses. This will be added to the salaries under the profit and loss statement. So this 28,000, for this 28,000, this 5,000 rupees of outstanding salary will be added. That means actual salary must be 33,000, 28 plus 5,000. But what other adjustment should be considered? Always outstanding expenses is a liability, because we need to pay the amount not yet paid. But anyhow, the company should have to pay this amount. But if it is not paid means it is a liability for them to make the payment of salaries to the employees, correct? So this is a liability under the heading current liability of balance sheet. This outstanding salary will be taken. Like this, twice we need to adjust. Each and every items we need to adjust for 2 times. Next, second point is make provision for bad debts in bills receivable by 3000. Usually provision for bad debts will be taken for the debtors. Since there is no item of debtors, like how we have considered in the previous problem as a trade receivable, this is also in the same manner, bills receivable which includes debtors, where we need to create a provision for bad debts. Bad debt means the amount cannot be recoverable from the customers. So for that we are creating a provisions. Okay. So this provision for bad debts, first of all, it is an expenses. It is a loss for the company, correct? Expenses are the loss will be taken to the profit and loss statement. So this 3000, if there is any item of bad debt in the trial balance, for that this provision for bad debt will be added. If there is no item, then directly we will take this provision for bad debts. Okay. So 3000 will be taken as an expenses under profit and loss statement. What about one more adjustment? This one more adjustment of this provision for bad debt will be taken under the current liability side of the balance sheet. Or what we can do, we can also do in the other manner that this provision for bad debt can be deducted from the bills receivable. See, here we have bills receivable 91,000 rupees. 91,000 rupees of bills receivable we have. This 3,000 rupees can be deducted from this 91,000 because this 3,000 is not recoverable. Understood? So this can be taken under asset side of the balance sheet. Okay. And it should be deducted from the bills receivable. Next is closing stock. Where do we take this closing stock? This closing stock, once we will take for the calculation of cost of goods sold. For the calculation of cost of goods sold under profit and loss statement. And other adjustment is always stock is an asset. Okay, whatever the stock which is existed in the company, that is an asset. Balance sheet should be prepared for the closing value only. So this closing stock only we will take, and this closing stock is a asset for the company and it is a current asset, will be taken for the balance sheet. Okay. Next, fourth adjustment, stock lost by fire was rupees 14,000. See, look at here, stock lost by fire. Because of the fire, the stock worth rupees 14,000 is lost for the company. However, the insurance company settled the claim for 10,000 and still it is receivable. So, the insurance company have agreed to pay the amount of for 10,000 out of the 14,000 loss. They have agreed to make the payment of 10,000. So here we have to make some adjustment. Look at here for making this adjustment. Say for example, here the company is having a loss of 14,000. Out of this 14,000 loss by fire, 14,000 loss by fire. Okay, the company, insurance company has agreed for 10,000 rupees to make the payment. So that means exact loss is how much? The exact loss is 4,000. This 4,000 is a actual loss, not the complete loss it is. So only the 4,000 is actual loss for the company, but this 14,000 worth of the goods is lost. Correct. That means there is a closing stock of 1,30,000. This closing stock, out of closing stock of 1,30,000, this 14,000 worth of goods is been he's to be reduced. So while calculating the cost of goods sold, this stock lost by fire of 14,000 should be deducted. Okay. So where we are considering this for the calculation of cost of goods sold once. And one more adjustment is we are receiving this 10,000. We have to receive this 10,000. But this 10,000 rupees must be receivable. But we have not yet received. So when it is receivable means what? Receivable, it means it is outstanding. When the expenses is outstanding means it is a liability. When the income outstanding means what? It is an asset. So whenever there is outstanding income or income receivable is always a current asset, it will be considered as a current asset. So this 10,000 should be received from the insurance company. So this for 10,000 rupees should be adjusted on the asset side of the balance sheet. Okay. So like this we need to adjust. Next for the then what is actually the loss, exact loss? 4,000 is the exact loss here. This exact loss of 4,000 should also be considered, and this should be taken under profit and loss. So the non-operating expenses and losses, under that we have to take this stock lost by fire of 4,000. Okay. So like this we have to adjust because there is a loss of stock by fire. So now we have understood how to make an adjustment of this stock lost by fire. I will repeat once again. This stock lost by fire of 14,000 should be adjusted here thrice. Why? Because 14,000 stock lost by fire should be deducted from the calculation of cost of goods sold from the stock. Okay. And there is a 10,000 rupees claim should be received from an insurance company. Out of 14,000, if they would have given complete 4,000 means only 2 times we could adjust. But now only 10,000 they are giving and yet it is not received. That means it is an outstanding income. So this 10,000, so we have to adjust on the asset side, that is will be taken under current assets as a income outstanding. But 4,000 difference, there is a 4,000 loss which cannot be recoverable. Correct. So that 4,000 loss should be taken as a non-operating losses because it is not an operating activity of the business. That is fire occurred due to uncircumstances. So this is a non-operating losses. So this 4,000 rupees will be taken under non-operating expenses and losses of the profit and loss statement. I hope you understood this adjustment. Let us go for the last adjustment, that is manager is entitled the commission at 10% on the net profit. So always there is an adjustment, there will be an adjustment for the managerial remuneration. So whenever there is an adjustment for the managerial remuneration, we need to check whether this managerial remuneration should be calculated on the net profit, before calculation of net profit or after calculation of net profit. That is very important. But here they said 10% on the net profit means there is no critical or to break your head. So only after calculation of net profit you can calculate managerial commission at 10%, manager's commission at 10%. Okay. So in the next problems I'll come with that adjustment as well. So when there is a manager's remuneration or manager's commission before net profit or after net profit, like that, there will be an adjustment. So if that is the case, so how to calculate this manager's commission? But in this problem, after calculation of net profit, say for example, look at here, there is a 10,000 rupees of net profit, means on this 10,000 rupees, 10% will be calculated. This 10,000 rupees will be 10% will be calculated as a manager's commission, and that will be deducted from the net profit to know the actual net profit. Okay. So this, like this, we have to calculate if they give the manager's commission is on the net profit. Okay. So now you understood only this much. Hope you have cleared with this manager's commission. Where we have to take this, you understand how to calculate this manager's commission, but where we have to take 2 times we have to adjust, correct? So this manager's commission once as an expenses will be shown under profit and loss statement as an expenses, but here this manager's commission, since it is not paid, it is to be paid, that means it is outstanding. So outstanding means it is a liability for the company. If it is a liability for the company, that means we will take under the liability side. Liability side means under current liability only. Okay, whatever the information in the additional information is given means it is not adjusted, it is not paid, it is not cleared. Hope you have understood. Let us do the problem, that means prepare the profit and loss statement and balance sheet. Okay, give heading. Let us give a heading, profit and loss statement. So which company's profit and loss statement we are preparing? We are preparing for Srujanya company, correct? Measures Srujanya company. Statement of profit and loss for the year ended or for the year ending 31st March 2024. And you know the format, particulars and to amount in rupees. Okay, let us take one by one. First item is sales. So what is the amount of sales here? Sales, it is 2,20,000. Since there is no sales return, we have seen already, only the goods return, that means it is a purchase return is given, there is no sales return. So I will take the amount of 2,20,000 directly to the outer column. 2,20,000 sales, it is 2,20,000 less cost of goods sold. So we have to calculate cost of goods sold. How to calculate cost of goods sold? You know it, correct? So either we can calculate here only, or what we can do, you can take write this as a working note. You can calculate this separately. Let me calculate here only. So first one is opening stock. What is the amount of opening stock? Look at here, there is amount of opening stock of 2,20,000. So this opening stock is 63,000. So let us take this 63,000 of opening stock, add purchases. What is the amount of purchases? Purchases, it is 1,40,000, correct? So 1,40,000 is a purchases. So add this purchases. If there is a purchase return, purchase allowances, purchase discount, that should be deducted. So here there is a goods return, that means purchase return. So this goods return should be deducted. The amount of goods return, it is 10,000. Then if there is any direct expenses, should be added. If we have one direct expenses, that is carriage inwards. What is the amount of carriage inwards? 3,000. So this carriage inwards of 3,000 should be added. And for all this, we need to deduct the closing stock. So let us deduct the closing stock. If you deduct the closing stock, the balance what we get is called as cost of goods sold. So what is the closing stock? It is there in the adjustment. Look at here, closing stock. 1,30,000 is the closing stock. Okay. Let me mark whatever the informations Okay, so let me take the items, whatever the items which we have taken, let me mark once. Here cost of goods sold we have taken once, purchases, goods return, carriage, so then opening stock, sales, these are the items we have considered already, correct? So this closing stock also we have taken 1,30,000. There is one more adjustment we need to consider here, one extra adjustment. What is that? That is stock lost by fire. So this stock lost by fire, as I said, since there is a stock which is lost due to a fire that is not existed, that means whatever the stock which is there in the company is to be deducted by how much? Deducted by 14,000. So let us deduct even that stock lost by fire. So after taking this total, stock lost by fire is how much? 14,000. So let us take this total. If you take this total, opening stock 63,000, 1,40,000, 1,40,000 of purchases, goods return 10,000, then carriage inwards 3,000, closing stock 1,30,000, stock lost by fire is 14,000. After making adjustment of addition and deduction, the balance, this is 2,20,000. Okay, so the balance what we get is 52,000. The balance what we get is how much? It is 52,000. So what is this 52,000? 52,000 is a cost of goods sold. Okay. Now deduct this cost of goods sold from the sales. You have a sales value of 2,20,000 and the cost of goods sold of 52,000. If you deduct that, the balance what we get is called gross profit. How much is the gross profit? Gross profit is 1,68,000. So this 1,68,000 is a gross profit. Now from this we need to deduct operating expenses. Operating expenses should be deducted. Let us take one by one. First one is salaries and wages. Of course, the salaries and wages are the operating expenses. Rent, rates and tax, operating expenses. Insurance premium is also operating expenses. Let us take one by one. Salaries and wages, 28,000. Salaries and wages, 28,000. Next, rent, rates and taxes, it is 5,000. Rent, rates and taxes 5,600. Rent, rates and taxes. This is 5,600. Next we have insurance premium. Insurance premium, it is 1,000. Insurance premium 1,000. So discount, as I said, let us take this as a non-operating expenses, not under operating expenses. So bank is an asset, plant and machinery, investment, all these are asset. Okay, sundry expenses. Look at here, sundry expenses is also an operating expenses. Amount of sundry expenses, it is 1,000. Sundry expenses. $1,000. Next further we have okay, opening stock, sales, consider bills. These are the asset side or liability side of the balance sheet. Let us go for additional information or the adjustment. So in this adjustment, if there is any information that should be taken, see, provide outstanding salary. What we had to do, I said in the beginning itself, I have marked here as well, salaries and wages are having an adjustment, but we have not taken it, correct? So this salaries and wages, for that we need to add the outstanding salaries. So this outstanding salaries of 5,000 should be added to the salaries and wages. Since we have not taken, what we can do, we can add here as outstanding salary. What is the amount of outstanding salary? This is 5,000 rupees. Next, further we have make provision for bad debts in bills receivable. Since there is no space, I'll move to the next page. Okay, so next adjustment, see this we have adjusted expenses, we have taken on the profit and loss side under operating expenses. Okay, make provision for bad debts in bills receivable by 3,000. This provision for bad debt is expenses for the company, but is this an operating expenses? No, this is not an operating expenses, this is non-operating expenses. Next further is closing stock. We have taken stock lost by fire. Since under stock lost by fire, there is one item called loss of stock by fire. See, out of 14,000, 4,000 rupees is a loss for the company, correct? Only 10,000 is paid by the insurance company. But this 4,000 loss is a non-operating loss, not the operating. But here this provision for bad debt also, what we do actually, this can be taken as an operating expenses also. Why? Because this bad debt arises because of the goods sold, correct? But how we have taken this discount allowed as a non-operating expenses, in the same manner creating the bad debt is not actually an operating activity, so this provision for bad debt will be taken as a non-operating expenses. So what are the non-operating expenses we have? Discount allowed is a non-operating expenses. Then provision for bad debt is a non-operating expenses. Stock lost by fire is a non-operating expenses, correct? We have 3 non-operating expenses and losses, and we have adjusted everything except manager's commission. Since manager's commission should be calculated on the net profit, we have calculated net profit at. So what we have to do, let us take this total. Okay, so let us take this total and take to the outer column. Okay, so we have 28,000 salaries, 5,600, 1,000 rent, rates and tax, 1,000 of insurance, sundry expenses of 1,000, then outstanding salary of 5,000. Then the total how much we get is 40,600. So what we have to do, we have got gross profit. And if you deduct operating expenses from the gross profit, the balance what we get is called as EBITDA, EBITDA, not exactly an operating profit. We need to deduct depreciation and amortization. Since here in this problem we have not seen anywhere the amount of depreciation and amortization, so the differences can be operating profit only. So let us take the difference and we'll write it in the outer column. So that is 1,21,400. This 1,21,400 is the differences between gross profit and the operating expenses. That is 1,68,000 minus 40,600. So you will get 1,21,400. So this is called as operating profit because directly we are taking it as operating profit as there is no depreciation. This is operating profit. Now from this we have to, this operating profit is also called as EBIT. So for this we have to add non-operating income and deduct non-operating expenses. Add non-operating income, non-operating income income. So we have share capital, bills payable, sales, only 3 items, and goods return on the credit side. So there is no non-operating expenses even in the adjustment also. So the non-operating income is nil. Next, we can deduct non-operating expenses. Non-operating expenses. As I mentioned, there are non-operating expenses. The first item is discount allowed. Discount allowed worth rupees 1600. Discount allowed worth rupees 1600. Next, we have provision for bad debts on bills receivable. Okay, provision for bad debts. Usually this bad debt will be taken as an operating expenses. So nothing problem if you take even this as an non-operating expenses. So provision for bad debt, it is 3000. Next, one more item we have non-operating expenses and losses, that is stock lost by fire. How much is a stock lost by fire? Is completely 14,000? Stock lost by fire. Is that completely 14,000? No. We are receiving 10,000. We are getting a claim from the insurance company of 10,000, but 4,000 is a loss. 4,000 is a loss for the company. So only these 3 items are the non-operating expenses. Let us take this total to the outer column. This is 8,600. So if you deduct this 8,600, the balance what we get is 1,18,800. If you take the difference of this 1,18,800, what you get is called as EBT. So this EBT can also be called as taxable profit. Taxable profit. What we have to do now? We have to deduct tax. So less provision for taxation or tax. Since there is no information on the provision for taxation, the balance what we got is called as net profit. But that net profit what we got is not the actual net profit. Why? Do you know why this is not the actual net profit? Because this net profit is before manager's commission. Before manager's commission. So the manager is entitled to a commission of 10% net profit, correct? So on the net profit, as we have calculated the net profit, on this net profit, we have to calculate 10% of that. And if you deduct this manager's commission, then the balance what we get is called as actual net profit. Okay. So now let us deduct the manager's commission. Less manager's commission. How much is the manager's commission? 10% on the net profit. What is 10% of what is net profit? 1,18,800. 1,18,800 into 10% of this 1,18,800 means it is 11,880 rupees. Then how much is the actual net profit? The actual net profit is the difference of that. Net profit. So the difference of that is 1,06,920 rupees. So this is the differences of net profit and manager's commission. So the actual net profit is 1,06,920. Where do we take this net profit? This will be taken to the balance sheet. Okay. So now let us prepare the balance sheet. So far we have prepared the statement of profit and loss. With this information, we need to prepare balance sheet now. Let us give a heading, balance sheet of Measures Srujanya Limited balance sheet as on 31st March 2024. Okay, particulars. Amount in rupees. So what we have to do? First we need to take equity and capital. Under equity and capital, the first heading is shareholders fund. Under the shareholders fund, the first item is a capital. What is the amount of share capital? Share capital we have is 1,52,000. $1,52,000. Is there any reserves? No information on reserves. Then surplus means the profit, net profit can be taken here. The net profit, whatever we have calculated. See, in the previous page we have calculated the net profit, correct? That net profit belongs to the shareholders, so we need to take that 1,06,920. 1,06,920. So this is the net profit. So this net profit we have taken from the statement of profit and loss. So this two information belongs to the shareholders fund. Let us take this total to the outer column. So this two total will be called as shareholders fund. What is the total? Total is 2,58,920. 2,58,920 is the total. So let us go now. Further is the second heading, long term liabilities. And next is short term liabilities, or called as current liabilities. Let us take whatever the information we have on the long term liabilities. See, so far we have considered these are the information relating to the profit and loss statement we have taken, and look at only the liability side of the balance sheet. See, we have marked all the assets and liabilities. Only two liabilities are there in the trial balance. One is bills payable and other one is share capital. See, bills payable is actually a current liability, not the long term liability. Let us see at least any information we may get in the additional information. So outstanding salary is also current liability we have marked. Provision for bad debt is also current liability, or else what we can do, we can deduct this from the bills receivable directly and shown on the asset side. Closing stock is also asset. Stock lost by fire and the claim to be received is an income, it is not a liability. Manager's commission, it is a current liability, that is outstanding manager's commission. So there is no long term liabilities. So let us take this as nil. There is no long term liability and we have only current liabilities. Let us take that current liabilities. What are the current liabilities we have? The first item is bills payable of 31,600. Bills payable 31,600. Okay, we have considered this bills payable also. Then we have outstanding salary. This outstanding salary is also a current liability. Outstanding salary. How much is the outstanding salary? 5,000. Next we have provision for bad debt. I said this, let us take that on the asset side. Stock, okay. Manager's commission, we have only one other item. Outstanding manager's commission. Outstanding manager's commission, how much we have calculated manager's commission? So we have got, okay, so this is the amount we got, 11,880 rupees, correct? 11,880 rupees. Let us take this total to the outer column. 48,480 we got. So this 48,480 is a current liability. If you take the total of shareholders fund, long-term liability and current liability, this is called as total liabilities. So what is the total liabilities? If you take this total, you will get 3,07,400. 3,07,400. So we have got a liabilities of 3,07,400, and even we should get the same amount on the asset side also. So let us do it. Since there is no space, let me go to the next page. Okay, so let us take this as assets. Assets. Under assets, the first heading is fixed asset. Fixed asset. Under fixed assets, let us see what are the informations we will get. So here we have bank, it is a current asset. Plant and machinery, then investment, furnitures and fittings, these three are the fixed assets. Let us take that. Plant and machinery of 24,000. Plant and machinery. Plant and machinery of 24,000. Next we have investments. What is the amount of investments? Investments is 16,000. Then furnitures and fittings. Furniture and fittings. So what is the amount of furnitures and fittings? It is 10,000. Okay, let us see any other information. Bills receivable, cash and okay. Even we have only these three information on the fixed asset. Under the fixed asset. Let us take this total. So this is 50,000. So this 50,000 is a fixed asset. Next, under current assets, we have bank. Bank is 27,400. Bank 27,400. Then we have bills receivable. Bills receivable, it is 91,000. This bills receivable, from this bills receivable of 91,000, we need to deduct provision for bad debts. Provision for bad debts. What is the provision for bad debts? It is given in the adjustment. Look at your provision for bad debts worth rupees 3,000. So this 3,000 we need to deduct. 3,000 we need to deduct from this 91,000. If you deduct deduct this 3000 from 91,000, the balance will be called as actual bills receivable. So what can be the actual bills receivable? 88,000. Next, we also have cash in hand. Cash in hand is how much? 2,000. Cash in hand is 2,000. Okay, we have taken all the items of the trial balance. Let us see further. Outstanding salary we have adjusted already on the liability side. Provision for bad debt we have adjusted. Closing stock should be taken. Okay, this is a current asset. Closing stock. Closing stock is a current asset. It is 1,30,000. What else we have? Stock lost by fire and the insurance company should have to settle 10,000. But they should have to settle this 10,000, not yet received, correct? This is outstanding income. Always outstanding income is an asset. So outstanding manager's commission. I'm sorry. Outstanding insurance claim on stock lost by fire. Stock lost by fire. How much it is? 10,000. So we have adjusted everything. Let us take this to the outer column. So what the total you may get? The total you may get is 2,60,400. Not 2,64,000. Okay. 2,57,000. This is 2,57,400. Okay. So now take the total. 2,57,400 plus 50,000. This is 3,07,400. What is this 3,07,400? This 3,07,400 is a total assets. Let us see what is the amount of total liabilities. It should also be 3,07,400 only. See, we have got 3,07,400 only, correct? So what is this? Total liability. That means total assets and total liabilities gets tallied. Means we have adjusted everything and the problem is correct. So hope you have understood by considering the information in the trial balance and outside the trial balance how we have to adjust to prepare the statement of profit and loss and balance sheet. Kindly keep practicing. Okay, let us come with let me come with one more next problem having some extra adjustments. Okay, thank you. See you. Take care.